What is up, guys? Eric here, Traveling Trading. So this video here, what I wanted to cover with you guys is, different indicators and things like that. That's going to help you with your trading. As you know, plenty of times when you're developing, your strategy, you may have certain indicators and, other things that are there to help you, decide what you're going to do with executing your trades. The only problem that a lot of new traders have is that they're not really exposed to all the different types of indicators that are out there. Yeah, you might, Google and do research and find things such as, RSI, stochastics indicators, MACDs, volume weighted average price, et cetera, all the basic stuff. However, there are a lot more different indicators that are out there that might fit your trading style and your trading personality that'll help you benefit, your trading in the market much more than using any of the other ones might. And a lot of times, traders find ones that they're more drawn to that makes, things a lot more easier for them in the market. So what I wanted to do in this video here is expose you to all the different indicators that are available so you can know exactly what, might fit you and your trading personality and just kind of give you that extra edge that you need in the market to be a consistently profitable day trader, okay? So as we go through these indicators, just kind of take notes on, which ones that might stand out to you. And of course, if you want to do more research on the indicators, that's fine. I suggest you plug it in to your trading strategy, see how it works out for you, paper test it, see how it works out, and then just kind of go from there, okay? So sit back. This is a 5-hour long video. So it's going to be a lot of different indicators that are out there, obviously. And of course, if you're watching this on YouTube or anything like that, definitely hit the like and subscribe button. You'll get a portion of it and all that good stuff. So if you need to learn a little bit more, definitely click, the links below. There's a lot more information out there for you to help you learn with your day trading. All right, so let's go ahead and get into it.
All right, guys, welcome to the video here. We're going to go over some advanced indicators today. This is going to be a pretty lengthy video for those of you who are watching it in the course. Those of you that might be watching on YouTube, it's not going to be that long. We're just going to touch over probably a few indicators you might not have heard of yet because not many people online like to talk about them. But you guys know me. I want to expose you to everything that you can possibly know about trading. So for those of you that are watching it in the course, this, is the time that you probably want to get out your pen and paper and take some notes as we go through all these indicators and what they pretty much consist of, because this is what's going to help you be able to, set up your trading strategy. Okay. Now, obviously, like I said, if you're watching this on YouTube, there's only going to be like, a few that we go over, but there's going to be a total of like over 300 different indicators that we're going to touch on here, guys. So as you're going through them, I would suggest just kind of notating which ones that might, be of interest to you, and then go back and, review how to use them and all that good stuff. And, later on in the course, you can look at how I, teach you guys to formulate your strategy. All right. So with that being said, let's go ahead and get into these indicators. And of course, if you're watching this video, do me a favor, just like and subscribe. But this video is going to be probably, a couple of days for me to put together since there's over 300 something slides that we need to break down in detail. But for the first few slides, we're just going to kind of touch on them as we're getting deeper into the tutorial. We're going to do more in depth on each of these indicators. Okay. I also kind of wanted to call this the ABCs of indicators because I'm going to go through this in alphabetical order. All right, as far as all the indicators that are there. But just kind of hang along. All right. So this is a little stock image of just different indicators for you guys to look at as well too. But let's go ahead and jump right into it. All right, one of the first indicators here we're going to talk about is the ADX indicator. And basically what that is the average directional index. The average directional index is calculated by the moving averages of the directional index. And it's really a good indicator to use for, evaluating the strength of a trend. A high ADX value indicates that the market is trending, where a low one is considered weak, and it might send that, of a weak trend and, not trending conditions. But pretty much it kind of breaks you down, where a trend might be ending. So as you kind of see in this, little excerpt here, especially towards the end of the ADX indicator, how the trend is starting to break. It's kind of showing you that more than likely it's going to, begin to reverse. So this is a good little, indicator slash really it's an isolator since it's down there that a lot of traders use when they're trading in trends. Okay, so that's just good to know there. Then there's the ADX Breakout Filter. The ADX Breakout Filter is, part of a trading system that's developed by Ken Calhoun. It's used to, for stock symbols with, to visualize the aggregation period of one day. So if you're, if you're a trend trader and you're, looking at trends over certain moving averages over a period of days, like, some people might use 7 days, 14 days. The ADX breakout filter is, used for a period of a day. So obviously you wouldn't want to use this in conjunction with one of those because you might get conflicting signals. So kind of keep that in mind. Also, when it is applied, by default, it recognizes, price symbol stocks and, whatever you're trading in between $20 and $70. Okay, with a $15 range of at least $5. But you can customize, any of these filters and indicators that you're looking at. It doesn't have to be, what's there. You can always adjust them to what fits, your trading style or time frame. So for example, if you're looking at maybe like a 200-day moving average, or you want to use this, over 200 days, you could do that. I wouldn't recommend that, but just you kind of get the idea. Whatever days you want to use it, you can do it, and formulate your strategy that way. Okay. Next, we have the ADX Crossover. All right. So the ADX Crossover, it's just a study where the average directional index crosses over a specific level. Values of the ADX are higher. The level is supposed to signify a stronger trend, either direction, no matter which one you go, whether you want to go up or down. And obviously, the lower values indicate a weak, a weak trend, similar to the last one we just looked at. Okay. And the ADXR is the average directional index rating. This is just like a smooth version of the regular ADX curve. It does the calculation over a arithmetic mean from the several bars that are put out before. From the past, it's kind of equal to the value of the ADX period. So it's just like a smoother version of it. As you can see, like in this illustration here, the red line is the ADXR. So kind of in comparison to the ADX curve, which is the purple line, you can kind of get another little gist of that. Then there is the AM Detector. Okay. Now, this is a technical indicator that singles out amplitude modulation out of the market. Now, this is for more traders who are mathematically based traders, because of the fact that it uses, market data spectrum. This here kind of helps you be able to determine volatility within whatever stock you're trading. Obviously, the higher it is, the more volatile it is, and so on and so forth. So, if you're like a momentum trader, more than likely, this might be an indicator that you would probably use to help out with your trading to be able to measure volatility. Okay. ATR, average true range. Now, this is one of my favorite indicators. I love the average true range because it just kind of helps me with being able to identify levels of support and resistance. But what is ATR, the average true range? This pretty much calculates the average true price over a period of time. Okay. And of course, the true range is greatest in the following: the difference between the current high and the current low, the difference between the current high and the previous close, the difference between the previous close and the current low. By default, the average true range is over a 14-day period. Wilder's moving average. If you don't know who Wilder is, go look at him. He's a big popular name in the stock market game. But anyways, both periods of moving average can be customized as well too. You don't have to stick to 14 days. That's just kind of like the default. But the average true range is pretty good indicator, and I like using it. Whenever I can. A lot of times in the reviews, you won't see it on the chart that I'm using, maybe in like TradingView or something like that. But it's good to have if you have room for it on another screen to kind of help you out. APTR, the average percentage true range. Pretty much the average percentage true range is a technical indicator proposed by Vitali Vitali Aparin. Hopefully I'm saying that right. Um, again, it's, a modification of Wilder's average true range. Um, and this, the reason for it is to measure volatility. But on the other hand, APTR measures it in another dimension. It does it based on percentage values instead of absolute ones. Comparing, volatility for different securities. So you could use this as a substitute, as opposed to average true range if you wanted to. You won't hear many traders talk about this because they probably either don't know how to use it or don't know about it. But this might be something you might want to look into if average true range doesn't help you out. Okay. Um, Similar to it, it uses true range. The mathematical computation of it is pretty much the same, um, except they're using percentages here, so it's kind of like a smoother version of it. And pretty much while comparing the two, it's just as equally useful. Okay, so kind of keep that in mind. But it's just another way for you to get like the good range of whatever security you're looking at. It varies from person to person how do you want to utilize it. Some people like percentages, some don't. So, take that with a grain of salt. Then there is the ATR SMA Breakout Filter. This filter here is part of the average true range. You would probably use this in conjunction with it. Okay. Again, this is, made by Calhoun. It's, pretty much consistent with the strategy of trading like the average true range, which we'll cover in the strategy section of the course as well too. Okay, um, but it's a pretty good filter to use, and by default this one is usually priced between $15 and $70 within a 90-day range. Um, for at least $5 minimum, and you want to have a volume of 1 million or more. Okay, so this is pretty much used by default. Default filters are pretty much used with like a lot of bigger cap stocks or highly traded volume stocks. I necessarily wouldn't use it probably on momentum stocks that I trade with small caps, just because the numbers could be out of whack. But if you're trading large cap stocks, this might be a good filter for you to use. To each his own. All right. So there's that filter. Okay. Then there is the average true range trailing stop. And you could kind of take a look at this. The average true range trailing stop is a plot study uh, the average true range study plots the trailing stop value, okay, and calculations with a specific trail type. So for those of you who use those trailing stop losses and stuff like that, this might be a good indicator for you. Okay, it's not modified. You can modify it to a specific factor that's probably customizable to how you use your trailing stop loss. But ideally, this is what it would look like here. Okay. Um, when you're viewing it on your graph, it has, gaps in between adjacent bars. Oops, sorry. Gaps in between, adjacent bars to kind of, smooth out for different price surges. So you can kind of see that in between here, in between here, in between here, in between here, in between here. Pretty simple. And then there is the acceleration. Oh, sorry, acceleration. I'm thinking of cars. Accumulation distribution line. And this is a study that assesses cumulative flow money in and out of securities. So it's defined as, the cumulative sum of product volume and closed location of a value. So basically what this means is that it's showing you at what price a lot of, accumulation or distribution of shares of a stock is being, executed at. So as you're looking at this little isolator here, you can see not many orders are being, executed, basically bought or sold. Okay. But as this, continuously going up, more and more and more orders are getting bought and sold and distributed at that price level. Okay. Pretty simple. Acceleration bands. All right, so the acceleration bands are based on the average true range for each day. Acceleration bands are plotted around a simple moving average as a midpoint, and the upper and lower bands are calculated based on high and lows. So basically, you're looking at the bands pretty much from here to here, okay? And you can kind of see that on the indicator here as well too. And of course, this is over a month period, you know, and using acceleration bands is probably more ideal for someone who's trading probably within a trend, um, or using simple moving averages as well, which is ideally using trends. So that would be at a time that you probably want to use the acceleration bands. Me personally, they're, I don't use them. They're good to know, especially depending on, how you're trading. I've seen a few traders actually use bands who do momentum trading, but they kind of use that as a target price for a stop loss and when they're going to exit a trade or enter a trade, et cetera, et cetera. So ideally, you could use it like that on a smaller time frame. Um, but probably wouldn't want to do it too small. Like if you were scalping, you may not want to do that, but it varies from person to person. Then there is the acceleration, deceleration isolator, and you'll see that right down here. Basically, this isolator is used to evaluate current momentum and speed. All right. It is calculated between the difference between the oscillator and its 5-period simple moving average. Okay. High positive values signify a rapid price growth. Long negative values suggest sharp decline. All right. So the values are fluctuating around zero level indicate slow price change. You can kind of ideally see that right here. It's pretty easy to identify. Um, so like right here, let's use this for an example. You can kind of see the momentum is picking up, and this is showing you, hey, momentum is picking up in this trade. Sharp decline, showing you, hey, this thing is dropping, okay? Vice versa. And as you can see, as it begins to flatten out, you can see so does the actual oscillator itself. So this is kind of a good thing to use when you're trading momentum. I personally use, is similar to, like the Squeeze Pro indicator and all that other stuff that we'll go over in a second as well too. But yeah, it's a good oscillator to use if you're a momentum trader. So account net liquidity, I don't really use this, but pretty much what it is just a study that shows the account net liquidation value for a position, whatever stock you're looking for in an account, and where it closes during the current market price. The account net liquidation value is plotted on a histogram on a lower subgraph, which is this graph right here, and it basically changes colors based on whether the value is positive or negative. So as you can see, this one was just positive, so it pretty much just stayed green. Obviously, if it was negative, it would turn red. Or you can change the colors if you want to on your actual um, broker platform that you use that might have this indicator. Okay. Accumulation distribution buying pressure. All right. So you could probably use this in conjunction with the accumulation and distribution isolator that we just mentioned a second ago. But basically, what this does is it evaluates the trend by finding divergences between the price of the indicator itself. All right. So it's calculated, using the accumulation and distribution. So if you obviously using that isolator, you probably want to have this as a sub, isolator underneath it as well too. Um, and it just kind of breaks down that the indicator accumulation mode when it, price closes is greater than the previous bar. And it's the difference between the two. Okay. So it's pretty, as far as the calculations go, it's, pretty simple, but it's doing it for you obviously much faster. Um, and you can see the strength is being evaluated over the algorithm. Okay. Um, if the market, makes a new high, the indicator, decreases. If it's signaling a weakening uptrend, the market, will make new lows, and the indicator will, be rising and suggest that the downtrend is weakening. Pretty simple, as you can see in this display here. Then you have the accumulation distribution pressure volume study. It's used to evaluate the strength of the trend by finding the divergences between the price, and it plots on the indicators themselves. This would be another one you would probably want to use. Okay. But again, to each his own. You could probably use that in conjunction with this bad boy here, the Accumulation Distribution Study. Now, again, this technical indicator here, made by Domenico Enrico. The main purpose of this here, of this indicator, is just to help you to be able to identify accumulation and distribution market phases, you know, that we described in like Dow theory. As you know, both phases are characterized by price compression. The indicator compares the price range value itself. The two modes of range calculation are available in a study from the high-low range and the average true range. All right, and you can see that in the accumulation distribution range listed there below. So, for example, you can see here that on this histogram, because you know it's plotted on the histogram, which is this right here, and it's called a histogram because it's showing you what had already happened. All right, which will help you be able to determine what can happen going forward. All right. But basically, you know, the lines are displayed in different color bars. All right. So obviously the blue ones are indicating sell, the red ones are indicating, you know, buys. But you can see here in this example here with snow, which happened the other day, the big old drop off. It's a big drop off, almost $100 a share. But anyways, massive, you know, distribution of here the shares. Basically, a lot of selling was going on. So obviously that would indicate here at this point, which is like right here, buying is being accumulated. So people are, you know, beginning to buy at this point. You might want to, you know, start looking at running with that trend. And obviously you would have had a good, you know, few cents to move from $1.84 to, you know, 205. That's a good $20 move. But this is basically breaking down how the accumulation distribution, you know, plays out on the histogram. All right. Then there's the accumulation swing index. Oh man, there's a lot of slides to go over for you guys. But anyways, the accumulation swing index is basically a study calculated as a cumulative total for the swing index with the specified limit move. So the study is considered to be a more powerful tool for analyzing long-term trends in the swing index itself than the swing index itself. If you're a swing trader, this would be ideal, you know, for you to probably use. A lot of times when you guys are asking about my swing watch list, this is one of the, you know, indicators that I would use when I'm, you know, looking at stocks. Obviously, you know, I don't swing trade much, but you know, when I do, this is, you know, one of the ones that I look at. Okay, so if the long-term trend is observed, the accumulation swing index is represented by a positive value, and conversely, if the, you know, the long-term, in the case of a long-term downtrend, the swing index is going to be negative. All right. If the long-term trend is sideways, the cumulative swing index is going to fluctuate between positive and negative values. And this is a good example right here, kind of showing you all that within one picture. Of course, this is over the course of almost a year period, but you can kind of break down the sections to kind of see, you know, whether it's uptrending, downtrending, or moving sideways. And that's what this, you know, is showing you here. All right, let's talk about the adaptive EMA. So the adaptive EMA is the moving average indicator. And, you know, it's kind of similar to the exponential moving average. You guys know about that or should know about that. If you don't, you know, we'll cover that too. But anyways, the exponential moving average is similar to the adaptive exponential moving average. The only difference is that it's, you know, more relative, closer to the high-low range, the price, and has greater weight on the bars. Okay, so like other moving averages, the adaptive EMA is, you know, trend following. Using that along with the regular EMA with the same length might give you a little bit better insight into the current trend direction. Using two adaptive EMAs with two different lengths will give you, you know, important crossing over signals. For example, right here. Okay, so this one is kind of just showing you the adaptive EMA and the, you know, regular EMA, and obviously at the point where it crosses, you guys know me. I like it, you know, when the indicators begin to cross, especially as a bullish trader, that's a good sign to, you know, to jump in, and you'll see that throughout this little graph here. So that's just a good example of how the adaptive EMA might work. And of course, you'd want to use this in conjunction with the regular EMA that you're using, and it should help you out a lot. Here's the advance and decline, which we were talking about earlier. So the advance and decline study is basically a technical indicator that calculates several values based on, advance and decline analysis performed, by whatever specific market you're looking at or stock you're looking at. All right. Um, Basically, it indicates the cumulative sum of the differences between the number of advanced stocks and declining stocks. All right. Um, and pretty much, just kind of talks about the different calculations of it. But as you can see here, this is what the isolator looks like. Okay. Um, and you would use this probably in conjunction with any of the other advance and decline indicators that you're wanting to use. For example, like the advance and decline cumulative average. Okay. So what this does, it's just a study on low frequency trading technical indicator based on the advance and decline analysis. Okay. So that's all it really is. It calculates the first two values. It calculates two values. The first one is, the difference between the number of advances and declines, to the overall number of stocks. And the second value it calculates is the cumulative of its simple moving average as well over a specific number of bars. And you can adjust that to however much you want. And you can see that, displayed here in this histogram right here. The higher it gets, might indicate a buy signal. When it begins to fall lower, it might indicate a sell signal. And you can kind of see that in correlation, with this right here. Pretty simple, especially in this part right here. All right. Now let's talk about the alpha 2. And we'll talk about Jensen's alpha in a second here. So the alpha 2 study calculates the excess average return of a benchmark index relative to the average return of a securities portfolio. Seems confusing, right? So basically, it's going to be equal to the average change of the benchmark index minus the security multiplied by the beta 2. Alpha 2 is just a security that has beta 2 of 1.0. By default, this study, calculates against the S&P index. So if you wouldn't use this indicator unless you were probably trading like, the S&P index or probably any other index that you want to trade. You can ideally use it there too, but I think this is mostly focused on the S&P index. I don't trade the S&P index, but hey, to each his own. Alpha Jensen is a study that calculates the average return of a securities portfolio relative to the benchmark index. Okay, so some traders like to compare the overall market to the stock that they're trading, right? Like, for example, the SPY or whatever index you want to use. This is comparing the way your stock is moving relative to that. That's kind of the simplest way to put it. And so does, the Alpha 2, like I said, is, kind of different than that. But that's basically what Jensen Alpha is doing. They're changing the securities price over the, in mathematical computation to the index. Best way to put it. The ARUN indicator. This is a study comparing two plots. The first one is going to be the periods of the most recent high within a specific period of time, and it's going to measure the recent lows within a specific period of time. Okay, so obviously the value is going to be 0 to 100. You'll see that a lot with a lot of isolators, but this is pretty much calculating that. Okay, obviously the higher the better, the lower the worse. Pretty simple. Then there's the oscillator. The ARUN oscillator is based upon two plots of the ARUN indicator. All right. And those plots are, the difference between the up and the down indicator, which is between 0 and 100. All right. And just like the indicator, it attempts to quantify the strength of a trend. So obviously we use this as a trend trader. I'm not, a trend. I don't mostly trade trends, but I do sometimes. Momentum, you probably wouldn't want to use this. And then there's the awesome isolator. Now this is a study indicating the difference between the 34 period and the 5 period simple moving average. All right. So you might want to use this in, conjunction with, either your, I would say more than likely your SMA versus opposed to your EMA, since EMA is much more, quicker. But, again, to each his own, use the indicator how you want. Just know that this is what this does. This is something you want to use in conjunction with it. All right. So that pretty much knocks it out for the A's. We're going to get into the rest of the indicators here in a second, but hopefully you guys can, see these different indicators that you're, liking here. Take a quick second, take a breather, digest them, go play with them. We'll jump back in it and get into some more, okay?
All right, guys, so that about does it here. So hope you got a lot of information from this video and found you some indicators that you think you might want to use in your trading strategies. If not, at least just learned a little bit more about the indicators that are out there. Of course, if you do want to see more, the full entire 5-hour video plus more is at the, how to day trade for beginners course. Just click the link below. Of course, like and subscribe if you haven't already. And if you have, thanks for your support. Look out for some more videos, teach you guys some more. Stay green.